All right, we are live. What is going on, everybody? Let's see what's going on in the market today. Up today, we're up over 1.5% on the S&P 500. Nasdaq is up over 2% from the close on Friday. Dow we're almost 1%, and then Russell 2000 almost 1.5%. Bitcoin has had a couple good days since close on or since Friday. We're up a bit from the bottom, although probably not out of the woods yet. Nice bounce and strong support holding around 100,000 here, but we do have some heavy resistance that we're going to have to break through above if you want to see that bull market start up again. Gold, really strong day today. That's a really strong strong green candle there after this sell off. Same thing with silver as well. We're back above $50 an ounce. And let's see what else. What are rates doing? All right, so T-bills holding steady. Obviously, they basically move with the Fed funds rate, so you're not going to see a huge amount of fluctuation there. The 2-year kind of leads the Fed funds rate. If you look at the 2-year with a lag, it kind of leads the Fed funds rate pretty predictably, actually. So we're seeing just some slight move there, with the 2-year headed a little bit higher compared to the close on Friday. Nothing major. If we look at the 10-year, which is going to be the closest analog to most forms of debt, like mortgages and auto loans and personal loans and business loans, because think about it, the average mortgage doesn't last 30 years. It lasts like 10 years or something like that, 7 years, 12 years, something like that, before people will refinance or move. And then that mortgage gets paid off when somebody moves, replaced with a new one. Same thing with commercial real estate loans are shorter, business loans are shorter. And so the 10-year is going to be the kind of the baseline for most debt in an economy. We're seeing a little bit of a pop today, but again, nothing major. We had this test of this long-term support line here, this trend line, bounced above that within the last couple of weeks. And so nothing major moving with rates today. All right. What kind of questions do you guys have? Ask me anything. Let me see. Can I pin a thing in the chat? Q&A. Ask me anything. Can I pin that so everybody who jumps in new? Yeah, pin message. Okay, cool. All right, let's see here. Not a good day to trade. I mean, maybe. Well, let's see. What has it been doing? Oops. Don't end. Share screen. Ooh, almost just ended. All right. Let's see what the S&P 500 was doing intraday. Yeah, not a bunch of volatility, so not a bunch of opportunity to trade in and out. But I mean, if you're there's a couple big moves here, so if you're trading on those, then depends on if you're bullish or bearish in your bias with your trading. All right, let's see here. ASST. My thoughts on ASST. What is it? Strive. What is Strive? Miscellaneous investment trusts. I have no idea. Let's see. Strive is a venture capital firm founded in 2011. I don't know. I don't have any thoughts on it. I'm sorry. Just what I see here, that looks terrifying to me. That's like, this is one of those classic charts that is like, you see something like this, it's a good sign of like, hey, stay away. You get these big pumps and probably a bunch of insider selling. So yeah, I don't know anything about ASST. So that's the extent of my my analysis there. All right, next question. Are we getting stimmy checks? I don't know. That if we do, it's going to just be money printing, because the deficit or the tariffs are not producing a surplus. It's like 250 billion or maybe 300 billion so far, which is a drop in the bucket compared to the overall deficit. Way smaller drop in the bucket compared to the overall spending. But they're not producing like a surplus, so it's just borrowing more, which is printing more um, in order to fund those refunds. So if we do get some sort of tariff stimmy checks, my guess would be the most likely outcome of that would be in the form of some sort of tax rebate, like a deduction, or maybe some sort of a credit on taxes for next year, like for this year, but into April. When do you think it's going to crash? I think there's still a lot of fear in the markets. I think we've got a lot further up to go. When the Fed starts cutting into the market at all-time highs, um, so far the track record, the market is up 100% of the time 1 year later. Um, so obviously that can change, but we have a big increase in liquidity coming when the Fed stops doing quantitative tightening, when they restart QE eventually, because they will have to, because the government runs perpetual deficits. When the government shutdown ends, all of these things are going to contribute to more money entering the system, and that pushes asset prices up. And it actually justifies higher valuations because you're avoiding the loss of purchasing power on the dollars. So, do you ever think about hair transplant? No, I don't. I've I've actually never really understood why guys do that. I actually okay, there are some guys who do have odd shaped heads, and when they do shave their head, it just something looks a little bit off. So I get it. I maybe I do from like from behind or from the side or whatever, but I've never thought like, oh man. In fact, I think I probably uh look better bald than when I had hair. I could be wrong about that, but I've also never seen it done like super well. And when I started to lose my hair, I was like 22 years old. Um, Actually, I was like 21 when it started really getting thin. And I looked into like the Rogaine stuff, and my baldness was going from like front to back. And I could have read it wrong, but I'm pretty sure it said you can only like Rogaine only works if you're balding from like the back to the front. Um, and so I didn't even try it. And I've been shaving ever since. How do you think Bitcoin will finish in Q4? I don't know. It really looks like it's struggling. I'm bullish long term. Short term, I really don't usually have any strong feelings either way because I don't trade it. I just stack it. Um, I would not be surprised at all to see Bitcoin somewhere around 100,000 still by the end of the year. Um, any thoughts on the $2,000 tariff dividend talk? Yeah, I don't think I'd probably think that the most likely outcome is it doesn't happen. Second most likely outcome is that it happens through some sort of tax refund, tax credit, tax deduction. I think the least likely outcome is that it's an actual check sent out to people's households. Why would gold be performing so well and other sound money Bitcoin not be? Um, I mean, a lot of it is a matter of timing. Um, and who are the main buyers and sellers. So retail is still the main buyer of Bitcoin. Institutional ownership of Bitcoin is uh, um, largely ETFs, which is not institutional. That's retail passing through it. Looks like institutional because it's like BlackRock is buying Bitcoin, but it's like for retail traders and investors who are doing that in their IRAs and in their brokerage accounts. And so that's one reason. Whereas gold is like the primary movers of gold are like central banks and sovereign wealth funds and large institutions globally. And Bitcoin's not there yet. So I wouldn't expect that just because two things are like qualitatively similar in terms of like scarcity and supply and things like that does not necessarily mean that they're going to have the same performance, because there are differences and those differences do matter. Joe, where did it go? Doesn't the bond market move the stock market simply due to the sheer size? And interest rate drops can force more money into stocks to find better returns. The bond market is a lot bigger than the stock market. It doesn't necessarily move the stock market, um, but yeah, I mean, when interest rates go down, that means that you can't get as good of a risk-free return on your money, and so it justifies taking that money out and putting it in something else that has um, more risk on it because you're looking for that higher return. So it's like if I can give my money to the government, let's say an extreme example. Let's say I could give my money to the government for 30 years and they give me a 15% or 20% guaranteed return on my money. By buying a bond, all the money in the world would go into that. That's the crowding out effect. And so everybody would sell all their gold, their Bitcoin, their stocks, for the most part, not everything, but most money would leave everything else, leave all productive businesses and just go to be lent to the government. So that's the crowding out effect. The opposite is true as well. If you can't get like better than a 0.5% on your money by lending it to the government, well, you're not going to do that. You're going to go put your money in something else, even if it has higher risk. You want that better return, especially once you pair that with growth expectations and inflation expectations, because lots of times when interest rates go down, the money supply is growing quickly, and so then it's like, okay, well now you're expecting inflation to be higher in the future, and so you're definitely not going to let your purchasing power erode at 1% or 2%. You're going to want to roll that over into something that has a better return. Um, so that is, but the other part about this is that short-term interest rates don't necessarily um, always drive long-term interest rates. Um, because if short-term interest rates go down and there's a big monetary expansion as a result, then long-term interest rates are still driven a lot more by free market dynamics. And so you can have people sell those long-term bonds, driving long-term interest rates up, and that steepens the yield curve in anticipation of that future purchasing power loss. Um, all right, next question. Could you say a few words on Bitcoin and the recent support from the 50-week simple moving average? Um, let's pull Bitcoin up. Let's go to weekly chart and pull up the 50 SMA. Yeah, failed breakthrough there. Nice little pop back above. Same thing happened here in April of this year. It acted as good support here in August and September of 2024. Last time we had a breakthrough of the 50 SMA was November of 2021, right when the big last bear market started. So, and it went down significantly and stayed down beneath that for a long time until March of 2023. Um, so I would be surprised if Bitcoin does go below 100,000 and stays below that for a while. I think it's this consolidation period with price building this base above 100,000. I think that's reasonable that will continue and hold above it, but we'll see. Long term, and by long term I mean years. I'm fairly bullish on Bitcoin. I don't really have strong thoughts in the short term, though. Um, let's see here. Where was the next question? Can you tell us about the backwardation happening with silver? Yeah, mostly it's just a physical shortage and a lot of standing for delivery. And so until that gets fixed, we're probably going to see more bullish price action from silver, and probably a lot of volatility as well. I don't think it's going to be something that'll drive silver up to $150 an ounce or $200 an ounce or $300 an ounce or anything like that. And if it does, it will likely be something kind of like, the last couple big. Well, let me pull up the chart so you can see. Go to silver, monthly, clear the chart. Okay. So silver has gotten up here a couple times before. Did back in what month was that? Is that still 79 or is that 80? Okay, January of 1980. Big bubble there. And then same thing right here in April of 2011. Big bubble there. So I think this is more sustainable, especially just given the supply and demand dynamics driving it right now. There's not a lot of euphoria or speculation on, making, getting super rich, widespread attention on silver across retail investors right now. And if you take out these peaks, you see this nice, let me switch over to logarithmic so it looks a little bit different. So you see, if you ignore these peaks, you see a nice little trend. And so we do have long-term bullish movement on silver. If just ignoring these peaks, and so I think this move is more sustainable. I wouldn't think that we would head back down to anything like even $15 an ounce, let alone something down here like $6 an ounce or anything like that. Obviously we could, it just doesn't seem like that's going to happen this time. But I wouldn't be surprised at all to see something like this happen again, where a bunch of money flies in because everybody thinks, oh, I'm getting rich here. And it goes up to, $100 an ounce or something, then it crashes right back down to 50 within the course of, a couple of weeks or something like that. All right. Which stocks do you see going up in 2026, regardless of macro being positive or negative? Macro has a lot to do with it. I think the most undervalued ones right now that are good companies have the best performance long term. Again, the short term trading, it's not just about macro, it's not just about like the fundamentals of the company. A lot of it has to do with the technicals as well, looking at that exact opportunity, looking at the risks in the short term. So that's what my trading services are. I share all my research of the companies that I'm long and short on. Some of the but going into 2026, that's ignoring what's going to happen right now. So my views on some of my positions might change until then, or before then. My some of my long-term just long-term bullish positions, and I mean years. So next year, yeah, they could definitely go down. I really like Berkshire Hathaway, Cummins, Amazon, Costco, Monster, Toyota, Exxon, Caterpillar, Chubb Insurance, McDonald's, Waste Management, SanDisk, ASML. ASML is the symbol. Yeah, ASML. So those are some companies that I just solid stocks that I really like long term. That's just my opinion, not advice. Let's see here. Some people don't want to be bald, so they get a hair transplant. Yeah, that's true. Somebody just asked me why I didn't. That was my answer. I wasn't commenting on whether other people should or shouldn't. Do you think we're any closer to a deflationary environment? No, because of what they're doing on the monetary side. So deflation and inflation, there's two sides to that coin. There's two sides to that equation. It's what is the quantity of money doing, and then what is the production of wealth doing? And so if we could have gotten a slowdown in the production of money, then the production of wealth, goods and services, that could have taken over, and we could have seen, in the next year or 2 years, some really nice potential deflation, in my opinion. But we're not seeing anything remotely approximating a contraction in the money supply. We already saw the reversal in that, and now the expansion is accelerating again. The only way that could contribute to any sort of deflationary forces is by making production cheaper. And so for an over leveraged economy where companies who produce the stuff that people want, if they're over leveraged with high interest debt and they can refinance for lower interest debt, then that makes production cheaper. It allows them to produce at lower costs, helps competition, increases supply of goods and services, and drives down costs overall. The problem with that, expecting that to happen, is that you also need inflation expectations across the board to be low, because if the government soaks up too much of that cheap debt and spends that money into existence, then the long-term inflation expectations go up. And so the free market doesn't get to take advantage of those low interest rates. And so then you don't get the deflationary forces from that. So we'll see what happens. I don't anticipate actual deflation. I don't. Okay, the question is, what do you think about NBIS, and do you think there's an AI bubble? I think in certain places there are bubble dynamics unfolding. Lots of times bubbles last a lot longer than people expect them to. I don't know much about NBIS, so I can't provide any good real commentary on that one. But I do think there are certain areas that like one really good way to tell is just looking at extreme valuations. Things like Nvidia, not really an extreme. Yes, it's a $4.5 trillion company closing in on $5 trillion company, but when you look at the like things, just like basic stuff like the price to earnings ratio, it's not that crazy. It's like 60 right now or something. If stocks crash, where do you think the money will flow to? Um, when this is something I tweeted about recently, and people just kind of lost their minds. I don't think they understood what I was saying. When you buy or sell anything, whether it's stocks, Bitcoin, gold, houses, cars, whatever, the money is not flowing into or out of anything. Money does not get created or destroyed from transactions. It goes from one person's bank account to another person's bank account, or from one person's brokerage account to another person's brokerage account. So anytime you buy a stock, cash dollars are leaving your brokerage account and they're going to somebody else's brokerage account in exchange for those shares. And so I know that probably isn't what you meant by the question, but I think it's important to recognize, because there's no, it's not like something can soak up all of the money. That's like, okay, well, this thing soaked up all the money, so now other stuff cannot, is not experiencing any price appreciation. It's like, no, the dollars just changed hands. That's it. Only debt creation and debt paying off increases or decreases the money supply, creates or destroys dollars. So non-debt transactions have no net change on the money supply. And so it if stocks do crash, then it's like, okay, well, obviously there's a bunch of people selling those stocks. But for every sale, there also has to be a purchase, because you cannot sell a share of stock or 100 shares of stock or a million shares of stock unless there is somebody on the other side buying those shares from you. And so again, that's dollars exchanging and shares trading from one person to another. So while you are selling shares because of a stock market crash and you're receiving dollars instead, maybe you're holding them in cash. Maybe you do decide to go buy something else with them, like bonds or gold or Bitcoin or something. And then those dollars just go to somebody else's bank account who sold those assets to you. And then they decide to do something with those dollars. And so when prices move rapidly, all that means is that, let's say the prices are moving down, it means the sellers are now okay, willing to accept lower and lower prices on their sales. And buyers obviously want to buy at the lowest price possible. So when sellers are willing to accept lower prices and there's nobody, you know, nobody holding out on that, then that's what moves prices down. And the same thing, what moves prices up is because sellers want to sell at the highest prices possible, buyers are willing to pay higher and higher prices for that same thing. The dollars are still just changing hands, though. All right, let's see. What was the next question? Thoughts that we're already in a bear market when you look at SPX versus gold, Bitcoin versus gold valuations. SPX versus M2 looks at the top, but it can drop due to QE. Okay. So quantitative easing or monetary, the total money supply is a really bad thing to use as a denominator for measuring prices. And that's because it's only looking at one side of the equation. It's not looking at the wealth side of the equation. It's if it's basically the quantity theory of money at work in a chart. If you think that the money supply contracting or expanding is the only influence on prices, then it would be a good thing to measure against. But it's like, well, clearly that's not true, because there's more wealth today than there was 20 years ago. There's more wealth 20 years ago than there was 50 years ago. There's more wealth today than there was 100 years ago, 500 years ago. The total stock of wealth, all of the goods and services that people want and use, the stock of capital, consumption and investment capital in the world increases over time. And so you have to take that into account. You can't just take into account the money supply side of the equation. Yes, an increase in the money supply, if all else was equal, would cause prices to rise, but all else is not equal. We also have an increase in the production of goods and services, the things that people actually want. And so that offsets, like, you could technically have an evenly growing economy with money supply that keeps pace with that. Prices would never change. And in fact, if you go read the Federal Reserve Act of the amendment from 1970, was it 1976 or 1974? That's what it says. Their dual mandate is a triple mandate. And those triple mandates of maximum employment, stable prices, and moderate long-term interest rates. Those are the three methods that they use, or the three ways that they're measuring and making sure they're succeeding in the one goal of making sure that the total monetary aggregates expand at the same pace as economic growth. That's the goal. Their one real mission is to make sure that they continue expanding the money supply along with the growth in the economy, and they just constantly overshoot that in order to make sure that they don't undershoot it. um, and so that's the goal from the Federal Reserve, which means that you can't just measure something by looking at the money supply. You have to measure it versus true purchasing power. And I think historically, the best measure of that is just looking at it priced in gold. You can't really look at Bitcoin priced in gold because it's so short term and there's such a wild price movement. It's not meaningful, that chart or that comparison. But you can look at the S&P 500 priced in gold. You can look at real estate priced in gold. And what you're seeing there is that there's no bubbles. So when the cost of health insurance is at an all-time high, when the cost of real estate is near an all-time high, when the cost of Bitcoin is near an all-time high, when the cost of gold is at an all-time high, when the cost of the stocks is at an all-time high, when the cost of food, gas, car insurance, everything is at all-time highs, you're not seeing bubbles play out. A bubble is when, hey, internet stocks are really expensive, but everything else is not. There's a bubble. A bubble is like, hey, NFTs and ICOs are really expensive, but everything else is not. Those are bubbles, isolated pops in euphoria in certain areas of the market or the economy. When everything is at all-time highs and it's been growing that way for years or decades, all you're seeing is the purchasing power of the money go down. And I think the best way to measure that is by measuring it in gold. What's your favorite book on investing and in general? I wouldn't have one book. As you can see on the shelf behind me, these are some of my favorite books. That's the Incerto series or Incerto series. I don't know how you pronounce it, by Nassim Taleb. Especially the first three are amazing. Start with Black Swan and then Anti-Fragile and Skin in the Game. That trilogy right there, one of the best. I've read that trilogy multiple times. Creature from Jekyll Island is right here. That one's really good. The Price of Tomorrow by Jeff Booth. No, that's not it. I don't see it on there, but The Price of Tomorrow by Jeff Booth is really good. The Almanac of Naval Ravikant is amazing. The trilogy by Saifuddin Ammous, the Bitcoin Standard, the Fiat Standard, and Principles of Economics. Those are amazing. We've got Atlas Shrugged right there. It's the only fiction book I have up there, actually. Energy and Civilization by Vaclav Smil. That one is wonderful. The two books by Ray Dalio that I like are The Changing World Order and Principles of Big Economic Crises, I believe it's called. He wrote the other book, just Principles. I actually don't like it. It's kind of odd, actually. You read through it and it's like there's so many principles that are kind of like at odds with each other, and it's not very well explained, and really no like profound insights. And I really didn't like it. I know it gets a lot of really good press. I didn't really see much value in it. So those are a bunch of books that I like. All right. Do you think that Europe, Asia might take the dominance of market over the U.S. if U.S. does nothing about it? No. If the U.S. is becoming more like Europe in terms of like regulation and subsidies, like government control over everything, but Europe is far ahead in that realm, and it's got a lot of momentum going in that direction, and it stifles growth so much. It's like we'd have to do a lot of catching up to get as bad as them. And nothing against, like, I went to England this last summer, and we did a bunch of touristy stuff, saw the castles and stuff, and it's like kind of like Disneyland for adults. I mean, I know some adults like Disneyland, which is a problem, but it's what I would consider Disneyland for adults. You get to go see like really old castles and that kind of stuff, and it's very cool. But it's like, man, you can't get an air conditioner there. Why? An air conditioner, to put in a room costs like $1,200, but there's so many regulations and laws. It's like, they're just like, well, we'll just suffer. Like, that's the right thing to do. It's like, all right, it's such an anti-growth, anti-progress mindset that's just embedded, because like this is the way that it's always been, so this is the right way to do it. It's not universal, obviously, across Europe. I just think that it overall hampers growth. All right, let's see here. Questions. Who do you think the next Fed chair should be, and who do you think it will be? My pick, for like a realistic pick, like obviously I'd put, if I could pick literally anybody, it would be somebody who could never get picked. It would be like, I don't know, Bob Murphy or Ron Paul or Jeff Deist, or I don't know, some of these Austrian economists, or libertarian anarcho-capitalist economists. So probably that would be like ideal pick. I know that that's not realistic. I think the most realistic kind of in that camp would be somebody like Judy Shelton. Trump would never, ever, ever, ever pick her. If that happens, that's going to be that's going to be wild. I don't think it'll happen though. And then who do I think will be? It'll probably, right now, actually, Besant is being floated again. Like there's rumors that Trump is considering nominating Besant, which I don't know if he can do both. So maybe he would have to be replaced at the Treasury. If he does both, that'd be disastrous. Like, can you imagine controlling both fiscal and monetary policy? It'd be insane. It's literally like a de facto nationalization of the Federal Reserve. And if you think a private Federal Reserve is bad, just wait until the executive branch fully controls it. Like that will be much worse. Yeah, I think that probably the most likely is, I can't remember his name now. Is it Stephen Millard or Menard, or he's the new guy that just that Trump just got in there to replace the last person that left. All right, next questions. Let's see here. Man, there's a lot. Okay, I'm sorry if I miss any, guys. There's a lot of these in here, so I'm trying to catch them all, but I'm definitely going to miss some. Do you ever share your personal investing goals? Is there a portfolio amount you're shooting for? Okay, so yeah, and business revenue target, giving goal. Okay. My portfolio allocation is roughly 20% gold, 5% cash or cash instruments like T-bills or money market funds, things like that. 5% Bitcoin, about 30% individual stocks, about 30% real estate, and that's single family homes. Make sure the cash flow, and not counting your personal residence. ideally. And then the rest, the leftover 10% would be for things like hedging and speculative trades. That's roughly the allocation that I try to stick to. Obviously, during certain market conditions, that gets out of whack, and then you can rebalance. And let's see here. Oh, and then that's initial allocations, and then you slowly rebalance through new contributions as well. That's typically what I tend to try and stick to. Business revenue target more. Targets are difficult. I don't like making. I used to do this a lot. I don't like making goals that are outcome oriented, because I can't control outcomes. I can only control actions. And so, like profit or revenue targets, those are outcomes that happen as a result of actions that I do. So I don't really like making goals that are outcome oriented, because they're out of my control. So if it happens or doesn't happen, it's not a good measure of success, because I'm not directly measuring what I could have done differently. And so I like to have goals that are a little bit more focused on the things that I can actually control and do. And then if I meet them or don't meet them, I can adjust my goals if necessary. And then also I can see what the results of those actions were to see if those were good goals. And I can adjust my goals based on what the results were. And so far, both my revenue and my profit for my business have been growing every year since I started. So that's a good trend. And so I like to focus more on the things that I actually do. Like one of the things that I'm starting right now, it's an action oriented goal, which is live stream at least twice a week or 3 times a week. Which is what I'm doing right now with you guys. Giving goal. I usually shoot for at least 10%. There's not anything okay. So for those of you who don't know, I went to school to be a pastor. My degree is in Christian ministries. That was my plan. I got into a ton of debt, started studying money when I got out of college, and realized that's what I really loved, and I could help people a lot better doing that because it was my interest, and there was actually a lot of room to help people. And so then I changed career paths and became a stockbroker. Um, the tithe thing about giving, everybody thinks, oh, you're supposed to give 10%. Well, number one, most people think that means give to your church. Go read the Bible. That's not in there. You're not supposed to give money to a church. There's nothing in the Bible about paying for a building with lights on and paying for a pastor's full-time salary and for a staff, salary. That's post biblical, largely pagan influence, around 300 AD, when the church became nationalized in Rome. The original purpose of the tithe is to take care of the poor, the widows, and the orphans, and the needy. That was a tithe, and it wasn't 10%. In the Old Testament, it was 23 1/3%, because there were two 10% tithes that happened every year, and then there was one 10% tithe that happened every third year. So add that up, that's like 23 1/3%. And then post Old Testament, in the New Testament, it wasn't a number; it was just give without restriction to whoever needs when they ask. So I don't think it's as important, the number. I recently did just significantly increase the amount that I was giving to like food pantries and homeless shelters and things like that, because of the SNAP benefits. I've heard a lot of the places that are doing the the food and the meals and stuff, they're just like running dry right now because everybody is using them a lot more. You were the person who put me on nuclear energy stocks like 3 years ago, and since then I'm up over 2,000% on the trades I've taken in the market. Fantastic. I love to hear it. I think nuclear is, well, not necessarily about nuclear stocks, but it's definitely the future in terms of energy production. There is no other form of energy production that has the energy density, the cost effectiveness, and the scalability, and the low impact that nuclear does. Like, if we produce the energy that we need over the next 10, 20, 30, 40, 50 years, it has to come from nuclear. There isn't another option. I love your short laugh in your videos when you explain something. I was like, well, sometimes when I'm explaining something, it just it just becomes apparent to me how comical it is, that that it's even happening or something like that. So sometimes it is funny. All right, let's see. Um, if you're close to retirement and heavy on cash, would you still jump in the market now? If so, what sector do you get in first, or do you buy all sectors at the same time with dollar cost average? Statistically speaking, like 7 or 8 out of 10 times when you measure any random period of time throughout the last 100 years, you will make more money by lump sum investing than waiting and dollar cost averaging if you have the cash available to you. If you're close to retirement, that can be terrifying. So you can throw it in the market, hedge with long-term out of the money puts, and then pay for those puts by selling calls. You're going to limit your upside. You're going to limit your downside. Once you have sold monthly calls enough to pay for your downside protection, then you don't have to keep on selling calls. You can if you want to produce income that way, but you're giving up upside. So you don't have to keep on doing that. Now you have free protection on the downside and you don't have to worry about the stock market crashing. Stock market crashes while you're doing that, you're fine because you've got the protection. If the stock market skyrockets and you get called away, then you keep the protection in place because you paid for it. You don't have to sell it, and then just enter into a new position and keep on going. So if I was near retirement and I had a lot of cash and I was like, I'm losing money to inflation, that's something like that would be what I would take. I can't tell you to do that, especially because options are risky if you don't know what you're doing. So you should probably learn how to use options if that's something that you're interested in. Thoughts on the current gold to silver ratio and whether it will narrow next year. The gold to silver ratio is hogwash. Don't pay attention to it. It's irrelevant. It's meaningless. It's useless. The gold to silver ratio for the vast majority of human history was held by law. So that is a useless ratio. When you go back and look at history and be like, oh, it was 16 to 1, it was 15 to 1, it was 20 to 1. It was because the exchange ratio of gold to silver was declared by law. And that's why all throughout history, there were shortages and excesses of gold or silver, depending on whether that ratio was, didn't line up with the supply and demand of either one, one way or the other. And then once that broke, you immediately saw that gold to silver ratio spike. The other thing is, even if it's not held down by law, there's nothing inherently in the markets that would dictate the that ratio would need to be anything, because again, it's just driven by supply and demand for those metals. The reality is that the monetary value of silver has been on the decline for hundreds of years, ever since paper was invented. Because before paper money that was redeemable for gold, silver was changed for gold. Paper money made gold infinitely divisible, and so you didn't have as great of a need for those lower value metals anymore. So silver's monetary value has been on the decline for centuries, not just, it's not just a recent thing. And that has not been true for gold. Gold's monetary value is most of its value today. Gold has some industrial usefulness, but most of its value is because central banks and nations and sovereign wealth funds stockpile it around the world. That's not true with silver. Central banks are not stockpiling silver. Individuals are stockpiling silver, but most of its value comes from the industrial usefulness. Again, I'm bullish. I just don't like when people look at something as stale and useless as the gold to silver ratio and say, oh, well, that means silver's got to go up, because it doesn't. It can continue to get more and more extreme for eternity. Okay. Yes, Michael, this is live. Let's see here. Next question. Do you see a future where the price of everything goes down, or do you think there's limited ways inflation can be reversed and is more just something to accept more and more? Over the long term of human history, prices do go down. We've got long-term deflation throughout world history, and long-term drops in interest rates across history, like at least 500 years, but they've done studies way longer than that and found that interest rates on average and obviously prices on average go down because over time humans create new ways to produce more for less. That is what growth is. That is the same thing as deflation. They're the exact same thing. Like it takes less human labor to get food today than it did 20 years ago, than it did 50 years ago, than it did 100 years ago. You think like a couple thousand years ago, that's all people did was get food and shelter. Like that's all anybody ever did. So over the course of history, we've learned to outsource human labor to machines that do it better than us. So production increases because we get more output for our inputs. And so today, poor people have food from any cuisine delivered to their doorstep every day. Like DoorDash is something that a, like a lot of not well off people use very commonly, and that's something that would have been unheard of 50 years ago. Like, what do you mean? I can get any food from any cuisine in the world delivered to my doorstep a couple times a day, and it's obviously not a good deal. Like pricing wise, unless you're actually doing the math on how much you're worth per hour and you're actually working those instead of going to get the food yourself. I think for most people, they're actually wasting money because they're lazy. But still, it's like that's one example of like we get more for less. We get more output for our inputs. And so it will happen eventually. It just we get these spikes of inflation when governments take over the control of the money. Same thing happened with Rome, and it's happened many, many, many times. And so we will get back to deflation at some point, but it takes the currency breaking for that to happen usually. All right, let's see here. Sorry, I'm missing some of the questions, guys. There's a lot of them, so I'm trying to get to them all, but we'll see. What is my workout routine? Right now I'm doing a push pull legs split, and I just rotate through that. I go 5 times a week. So usually it's like push pull legs, push pull. And I start over on Monday because I don't lift on the weekends. By that time I need a little bit of a rest. My workout routine is similar to like what somebody would do if they were like wanting to compete for bodybuilding. I don't have any desire to compete. I just like that as a hobby, like that style. It's the most fun to me. And my current weight, I weighed in this morning at 174, yesterday at 176. So I'm probably right there at 175, which is like 5 pounds less than I was in 2021 after I lost 50 pounds from the carnivore diet. I've done a couple bulking and cutting phases through there. But I definitely have more muscle now. So I am leaner now in terms of fat, body fat percentage. I got a DEXA scan like a month and a half ago. I was at 10.3%. So right now I'm probably at 11. And for those of you who don't really know bodybuilding that well, it's like if you're on stage and you win at a bodybuilding competition, you're usually like 7%. Like anything under 5% is like you die. So 11% is fairly lean. And I don't really do much cardio other than like wrestling with the kids on the weekends and evenings and go on walks, but I don't do anything like crazy. Like I did long distance running for a little bit, did those like Spartan races, and I just hate it. I couldn't keep going. All right, let's see here. Where would you move outside the US? That is a great question. So currently I'm in the process of looking at getting dual citizenship, getting second passports, just as a backup plan. Because if you just see the direction where things are going, there's a chance where in the near future, maybe, but long-term future, I think that could become necessary. And you want to have something like that in place before you actually need it, because once you need it, if you don't have it in place, it might be difficult or impossible to get it. So I am looking into that right now, but where you get a second passport or dual citizenship doesn't necessarily mean that you would have to go live there. So typically you want to get if you're going to get a dual citizenship, a second passport, you want to do it the easiest way possible. So look at your family history, see if you can, get citizenship by descent from like your grandparents or something like that. If you have family that came from another country relatively recently, and then have that in your back pocket, but you don't have to go live there. That's just so that you can have somebody else with jurisdiction over you that will allow you to escape if you need, will allow you to leave. The place where you would go and live can be different. Like you have a time where, let's say you've got, parents that came from Italy or grandparents that came from Italy. So you get your second passport there. You have to leave here for whatever reason, political, economic, whatever. So you go live in Italy for a couple months while you find a place to go relocate, because there's a ton of places around the world that offer really easy entrance through, like residency programs and things like that. So, so they are separate, they're different, and you should think of them differently. If you don't have citizenship by descent, options available to you, then you go the investment route. You can either buy bonds of the governments of these countries, and or you can just make a donation to the governments of these countries, and they'll give you a passport. It's for individual or families. It's minimum going to be a couple $100,000. So it's not something that is worth doing unless you've got a significant amount of like significant net worth that is like worth protecting at that point. Um, because if you're just starting out and you're like, okay, well, let's say next year I have to flee. It's like, well, you're not, you don't, there's not much that you would have to be leaving behind, basically. Um, so you don't want to do it too early because it wouldn't be worth the cost, essentially. But in terms of countries where I would want to move, there's a couple countries that I think in South America are on the up and coming in terms of free markets, rule of law. I think Colombia is pretty good in that regard now. There's a couple countries in Eastern Europe that I've heard are good. I haven't visited any of these, by the way. This is just like brief research, like not coming from a super educated position at all here. There are a couple countries in Southeast Asia, like Malaysia is. I have been there actually. I would love to go to, or I've been to Singapore. I'd love to live in Singapore. They've got really good rule of law, free markets. Same thing with Dubai, although they've got a lot of slave labor or alleged slave labor. So I'm not sure about that one. But if I had to leave like right now, I'd probably spend a bunch of time in a bunch of different countries before I settle down. Do you think a totally free market is the way to go, and would it regulate itself in view of the irregularities in power dynamics at play? Yes, I think the free market has the best solution to basically every problem. And when you talk about like regulating itself, depends on what you mean by that, because a lot of people when they say like free market, unrestricted or what is the word? Unfettered? What do people always say? An unrestricted free market or whatever. Usually their argument reverts to, well, what if somebody decides to use force? Then there's no government to come in and stop that. But the definition of a government is the one that we give the legal monopoly on violence to use force. So it's like, oh, in the off chance that somebody decides to use violence, let's give somebody a monopoly on violence. Like, it's a little bit counterproductive if the goal is to prevent violence by giving somebody the authority to have a monopoly on violence. And so at the end of the day, like a free market moral government would be one that was there to enforce contracts and protect property rights. And so it's essentially just the communal defense of individual rights. And anytime you get a crossover into the violation of individual rights, then it becomes a government and not a free market. And if it doesn't cross over, then a regulatory agency in that sense would be a free market institution that protects the free markets. There's a lot of books on this, and it's a really kind of nuanced topic once you get into the area of like actual pure anarchism. The best book that I would recommend on this would be Ethics of Anarcho-Capitalism. I don't know the author. It's a yellow book, The Ethics of Anarcho-Capitalism. Yeah, anarcho-capitalism for the win. Thanks for the super chat, by the way. There was a question in here. Somebody said no books from Rothbard. I can't believe I didn't. Any book from Ludwig von Mises or Rothbard, any of the, though, probably Rothbard would be my favorite because he writes in the easiest way to understand from all of those great thinkers. So any books by Rothbard. I'm currently reading. Oh man, I don't remember. It's shoot, I don't have it up in front of me. I'm currently reading. It's not Man, Economy, and State. I'll find it. It's a very good. It's probably my favorite one by Rothbard so far. He's my favorite of the old school libertarian Austrian economists to read. Some of the other ones, like, they're just a little bit. They're not as clear in their writing. All right, let's see here. It's not the theory of money and credit. For a New Liberty. For a New Liberty. That's the one. The Libertarian Manifesto by Murray Rothbard. For a New Liberty. For a New Liberty. Amazing. Probably my favorite book by him so far. All right. There's a couple more questions on my diet. So I did the carnivore diet from January 2021, January 1st, 2021. And I was like I didn't weigh myself the day before. I believe I was closer to like 237. But prior to that, the last time I had weighed myself, I was 230. So I always just say I was 230 because that's, on the safe side, on the low end. So on New Year's, I was 230, January 2021. I went carnivore. It felt like I was going through heroin withdrawals for like a week. I was just like imagining dumping Skittles into my mouth, and it was terrible. But after that, I was like good to go. Ate meat and cheese and eggs only for a year. Dropped 50 pounds in 5.5 months, and then stopped losing weight. I never went hungry. I always tried to eat as much as I could, but you get full really, really easily, and you don't have any desire to overeat when you're doing carnivore. So I lost those 50 pounds. I stopped losing weight at 180 just without trying. And then I stayed steady there for the rest of the year. And then starting in 2022, I started to introduce like fruits, vegetables, and now I would be considered, paleo hunter gatherer. And that's been for the last 4 years now. And I lift weights 5 times a week. Do you already cover your thoughts on a 50-year mortgage? I did not. That's actually the first question I've seen on that, which I'm surprised about. This is another one. I posted on Twitter about this, and everybody lost their minds. Okay, so I think this is a fairly straightforward opinion, but apparently people are very in a huge disagreement about this. So the 30-year fixed rate mortgage is a product of the government, not the product of the free market. And that's evidenced by the fact that it's only available in the US where we have laws about it. And everywhere else in the world you go, pretty much, it's 5 to 7 year adjustable rate mortgages, where every 5 to 7 years, the interest rate changes. It's like, that is logical. That would be how housing loans would work, because the lenders are like, well, I'm not going to give you a fixed rate for 3 decades when I don't know what inflation is going to be. And so that's one of the reasons why U.S. real estate is artificially good relative to the rest of the world, because we've got 30-year mortgages. Not only that, we've got federally guaranteed and federally backed mortgages. Not only that, we've got mortgage-backed securities purchased by the Federal Reserve. Not only that, we've got grants and subsidies for first-time home buyers and other mortgages given by the federal government. So we have so much artificial demand being pumped into the system, because every time there's trouble, instead of dealing with the problem, they deal with the symptom, which is like, oh, some people can't afford. Here's some more money. That's going to drive up prices. That's all it does. When you throw money at education, it increases prices by the amount of money you threw at it. When you throw money at health insurance or health costs or medical costs, that's going to raise prices by the same amount of money you threw at it. When you throw money at housing, it's going to raise prices by the same amount of money you threw at it. So artificially low interest rates, plus all of the assistance and backing and guarantees and everything the federal government does, is what has driven real estate to the place that it's at today. And 30-year mortgages were considered preposterous when they were introduced, and everybody said the same things back then. They were like, oh, just get a 30-year because it's a better payment and invest the difference or pay it down faster. And it's like, yeah, but nobody does. Everybody just gets the 30-year and sticks with it. And it's because it pushes the prices up to a point where that's actually the only thing you can afford now. And so if on average people can afford a $500 a month increase in, their payments would go down by $500 a month, prices increase to the point where now they're paying the same as they were before per month, but it's $500 different than what that 30-year mortgage would be. And so it just raises prices. And that's the real problem. It's dealing with the symptom by adding fuel to the fire. If you want to actually fix the housing crisis, the housing affordability problem, number one, the federal government has to get out of real estate 100%. No mortgage-backed securities, no grants, no subsidies, no guarantees, nothing. Number two, you actually need to, this is another controversial opinion, you need to outlaw zoning laws and building codes. The reason why is because zoning laws are violations of personal property rights. I am not allowed to build whatever I want on my own property. That's a violation of property rights. And when you hear me say the federal government needs to outlaw something, you might think, well, that's not very libertarian. It's actually the most libertarian. When you have a law that restricts governments from imposing laws, that's the right type of law. And so allowing people to do what they want with their own property is what creates the ability for people to take advantage of opportunities, saying, hey, we've got all these people that want to pay for somewhere to live that they can't afford. I'm just going to build something. I'm going to create a little place in my backyard for this. I'm going to add a new story. I'm going to do whatever. And when you look at the development of cities over the last couple hundred years, they grew organically without zoning laws and building codes and all of that, based off of the supply and the demand of what consumers were looking for and what people could afford and what people wanted. And that allows for vibrant communities to grow. It's why there were walkable cities and all that, because you didn't have central planners imposing their views that were paid for by lobbyists. Building codes are the other thing that's controversial, but hear me out for a second. I'm not saying that things shouldn't be built safely. I'm saying that if I want to build something on my own property, I should be able to do that, regardless of what anybody thinks. And then if somebody else wants to buy it, or if I want to get insurance on it, then obviously I'm going to have to build it in a way that they want it, or I'm going to have to build it in a way that the insurance company wants. Right now, the way building codes work are they're owned by like private organizations. They're not owned or created by cities. Cities just enforce them with the force of law. You can't go in most cities and print out the building codes because they don't belong to you. It's illegal. You can only look at them online. And so you get these building codes put in that are just paid for by private companies that say, hey, well, we want the city to enforce only our thing because we have the patent on this technology for these sprinkler systems or whatever. And then it drives up the cost of building, tenfold for that one item. And so it's a corrupt system of governments enforcing things on the market that drastically reduce supply and drastically increase demand. You get rid of all of that, prices collapse. That is bad for the people who have all of their wealth in their homes, which is why none of these things will ever happen, because homeowners are big voters and they've got a lot of money in lobbying through like the NRA, and not the NRA, the NAR, the National Association of Realtors. So it'll never happen. But if you wanted to actually fix the problem and not just deal with the symptom and make the problem worse, then that's what you would do. All right, let's see. So you're bald because you went to school to be a friar. Yeah. Yeah. I when I don't shave for too long, I still get the hair around the sides and the back. So I look like the, Danny DeVito. I do, I put a nice robe on. I'd look like a friar. All right. Single family home investment. What's the criteria you would expect that is needed in order to purchase a home for rent? Obviously mortgages are outrageous now, but we do have cash. The main criteria is A, I don't have to do anything, so I need a really good property manager, and B, it has to cash flow. That's it. It doesn't even have to cash flow a ton for me. Like, this is my rules for me. I don't care if it cash flows a ton. I just care if it cash flows a little bit, because right now interest rates and pricing, all that impact that. And so I'm like, okay, over the next 10 years, 20 years, 30 years, as I accumulate more properties, refinancing becomes available, my debt gets paid down, cash flow is going to improve. And then you build wealth all the other ways with real estate as well, the tax savings and somebody paying for your equity increase along the way, inflation pushing up the prices of rents along the way. So as long as you start off with the cash flowing a little bit and it's not an expense for you, then like for me, that's the baseline. Okay. What is your take on simply holding 25% of a world ETF, 25% gold, 25% Bitcoin, and 25% Berkshire Hathaway? World ETF, gold, Bitcoin, Berkshire Hathaway. Well, it's not. In my opinion, that's not a bad allocation. I would think you're a little bit overexposed to gold and decently overexposed to Bitcoin. And the reason why is because Bitcoin is still an asymmetric bet. There is no guarantee that Bitcoin is going to become used as money in the future. Historically speaking, the most likely outcome is that gold returns as the base layer of money. It's possible that Bitcoin replaces that, but it's not baked into the cake. It's not a for sure thing, which is why it's still so volatile and only trading at 100,000, because the market is pricing in the the uncertainty of the future of it. And so if it goes to zero because people just stop using it, and that could happen, um, then you lose 25% of your portfolio, which is a big loss that you have to make up for. 25% in gold is also a little overexposed in my opinion, because gold is money. So when you look at that as like your savings account, it's in my opinion, a little too conservative. Your purchasing power is going to be maintained over time, but you're not going to make money by investing in gold. Um, it's just like a real savings account. And so you look at gold, it's gone up, double in the last year and a half. And it was sideways, before that for a couple of years. It's like, okay, over the last 5 years, 4 years, gold has doubled. Has your purchasing power in gold doubled over the last 4 years? It's like, well, everything is more expensive. Stocks are more expensive. Cars are more expensive. House is more expensive. Insurance is more expensive. Food is more expensive. It's like, so no, your purchasing power hasn't doubled over the last 4 years in gold. It's kept up, but you're not going to make money over long term holding gold. So it's a savings account to take advantage of deals and to be able to not have to sell your assets when they're on sale. You can actually be a buyer of assets when they're on sale. All right, let's see here. Questions. Are you investing in the post-quantum cryptography space? No. In fact, I am short a couple quantum computing companies right now through the use of put options. Let's see. Regulations and building codes protect the homeowner from the price of their investment going down. That's partly true. Not true if you get a 50-year mortgage, though, because for the first, 15 years, you're paying only interest. And so if the price drops a little bit anywhere in that amount of time, you're on the hook. Now you're underwater. So it's even worse than a 30-year mortgage, and worse than a 15-year, because your equity is so small at that point. And it doesn't get better for a longer period of time. But yes, it protects incumbents. So all the government intervention, whether local or federal, protects incumbents. So it makes people who bought a long time ago the best off, makes people who bought recently better off, it makes people who are about to buy right now okay, and it makes future buyers like out of luck. In fact, if we keep on going this direction, very soon, most people will be priced out of real estate forever. Like, aside from a few people who advance up the income ladder very, very quickly, most people who don't already own a home will never be able to buy a home in their lives. And that's probably, I'm guessing within the next decade, that will be true. Yeah, property taxes, absolutely terrible. That keeps prices down. But it's that's a big problem as well. Let's see here. How would you recommend moving dollars to Singapore? I have a family in Singapore and want to start an investment account there and start transferring wealth there. Well, the first and easiest way to do that would be to buy gold and store it there. And this is one of the safest places in the world to store gold, by the way. So the company that I know that I really like out there is Silver. The website is silverbullion.com.sg, I believe. It's Silver Bullion. It's a Singapore company, and the private vaulting service there. Segregated, allocated, allocated and insured, and I'm sorry, unallocated, not allocated. So great. There's other companies that do it there well, as well. And so that'd be the first way to do it. I don't like opening up bank accounts in other countries, because then that's reportable. You can, but brokerage accounts and bank accounts in other countries are reportable, and they report things differently than we do. And so come tax time, it can be a big hassle to report that, just for the sake of having some cash in a bank account in a different country. And it's probably not going to provide you as much protection as you think it will, but it could be a fine first step, especially if it's just like a checking account or a savings account or something. It's probably not the worst, most complicated thing. All right, let's see here. Do you have a retirement net worth target for yourself? I struggle with this question because if I wanted to, I could retire today. I could stop working today. The problem would be, well, number one, I've got a very high income, and so I would have to reduce my expenses a lot to match what my retirement income would be from my assets. And right now, I don't want to do that. Number two, I really like what I'm doing. I get to learn about stuff I like to learn about and teach people about stuff I like to teach about. Um, and so if I was like, I'd be forcing myself to not do something that I want to do that also happens to make a really good amount of money. Um, and then the question would be, well, what am I going to do instead? It's like, I don't think it's good to model not working to my kids. I mean, I take a good amount of time off. Like we travel and, I don't work crazy hours anymore. And so I believe I spend a sufficient amount of time with my kids. Plus they're getting older and they're busy throughout the day. They're doing a lot of schoolwork and they're doing a lot of activities and they're going around town doing stuff. And so it's like, well, then I'd just be sitting on the couch. Like, what am I going to be doing while they're working on like their things? It's like, I don't think that's very good to model. Plus, I enjoy what I do. So, um, realistically, at any time, if it gets to the point where I don't enjoy it anymore and I'd rather do something else, then I will, even if it's a significant or complete drop off in all my income, because I could do that today. I also fundamentally don't believe in retirement